Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Ares Real Estate Income Trust. It's like a financial treasure map. But instead of gold, we're looking for insights into how this real estate company is doing. Will we find buried treasure or just a bunch of rocks? Let's find out. Here's the gist. Ares Real Estate Income Trust just updated everyone on their financial health. Think of it as a checkup report. We're talking about how much the company thinks it's worth. That's the net asset value, or find how their properties are performing and where they see things going. They also have a detailed breakdown of their real estate holdings, the buildings and land they own. We will go through the details and see what it all means for the company and its investors. But before we decode this, if you like breaking down tricky corporate stuff, smash that subscribe button. Also join our Discord community in the description. This is a report filed with the Securities and Exchange Commission, or SEC, in May of, you guessed it, 2025. This filing, called an 8K, is basically an update about important things happening at the company. In this case, it's about their net asset value, or NAV, and what's going on with their assets, like the properties they own. Here are the two important concepts to keep in mind. First, the transaction price. That's the price you'd pay if you were buying shares of the company. And that price is related to the NE, which we mentioned earlier. Net asset value represents a company's estimation of its worth after subtracting its liabilities from its assets. To find NAV, they have an independent valuation advisor called Altus Group to help them figure out how much the properties are really worth. Altus Group looks at the real estate they own, the loans they've made, and even some joint ventures they're involved in. This valuation gives investors insight into assessing whether the current value of their share is reasonably accurate. They make it clear that when they talk about aggregate fund NAV, they mean the total net asset value of all the shares and partnership units out there. Think of it like slicing up a pizza. The aggregate fund NAV is the whole pizza, and each share or unit is a slice. Later we'll see how much each slice is worth. Time to talk numbers. This table breaks down what makes up the company's net asset value. It compares May to April of 2025, line by line. This level of detail offers insights that goes beyond mere top-line revenue or profitability figures. So let's dive into the story of their wealth. First, their total investment in real estate. As of May, it was about $6.1 billion. That's with a B. That's compared to around $5.9 billion in April. So their real estate holdings increased by over $200 million in just 1 month. That's a significant jump, meaning they acquired multiple new properties in a very short time frame. Next up, cash. They had about $33 million in cash at the end of May, down from about $44 million the prior month. A drop in cash could mean they spent more, which could have been buying those new properties we just talked about. Now for the debts, their line of credit, term loans, and mortgages totaled about $2.5 billion in May, compared to $2.4 billion in April. That means their debt load increased by over $20 million within a month. Looking at these 2 points with increasing debt and decreasing cash, it paints a picture of a company actively investing in real estate, likely using debt to finance those purchases. Finally, the aggregate fund NAV, the total value of the pizza, which was about $2.58 billion in May, a slight increase from $2.57 billion in April. The table also shows the total number of shares and units, which came to roughly 335,231. These values combined are used to compute the actual value of everyone's share value. Now for the really critical part that everyone cares about, how much each slice of the pizza is worth. This table again compares May of 2025 to April of 2025, but this time it focuses on the NAV per share for different share classes. They have a few different share classes: TRSR, DR, IRE, SPR, DPR, IPR, and OP units. As of the end of May, the NAV per share for all classes was $7.739 in April. This represents an increase in the value of each share from April to May. They point out that they estimate how much they might have to pay in distribution fees. Those are fees paid monthly with respect to certain classes of shares of our common stock in the future. As of May, that number was about $66 million. However, they don't subtract that amount from their NAV calculation. They want the NAV to trade that amount from their NAV calculation. They want the NAV to show their value on the date they calculate it. That's what the company thinks is fair and the honest thing to do in this case. And a very important disclaimer here, the NAV is just the company's estimate. It's not a promise that you could sell your shares for that exact amount, but it's the honest reflection of their financials. So how do they value their properties? They use something called a discounted cash flow analysis. The table breaks down a couple of key inputs. One is the exit capitalization rate. That's like an estimate of how much return an investor would expect when they sell the property. Another is the discount rate or internal rate of return. That's what they use to figure out the present value of future cash flows from the properties. Also important, these numbers differ based on the property type, such as residential, industrial, retail, or office. As you can imagine, each type carries its own risk and rewards. The stage and imagine each type carries its own risks and rewards. These numbers all go into a formula to estimate the value of the properties. Importantly, they explain how changes in these rates would affect their property values. This is to show they have considered economic factors in their calculations. For example, if the exit capitalization rate were to decrease by just 0.25%, the value of their properties would increase by about 3%. But if the rate increased by the same amount, the value would decrease by about 2.7%. These numbers are just estimates, a hypothetical scenario to show investors the sensitivity of these calculations and how small differences can impact the ultimate numbers. They also authorize monthly distributions of 0 owned 33333 per share to shareholders for the month of May of 2025. It's like a dividend paid monthly. As of that same date, they owned 130 properties, totaling 25.3 million square feet. That's a lot of real estate with 94.9% occupancy. Their leverage ratio, that's how much debt they have compared to their assets, was 36.5%, and they raised about 200, their assets was 36.5%, and they raised about $23.8 million in shares. Here's a fun fact: in all corporate filings, you find that they contain what is referred to as a forward-looking statement, and what that implies is that these numbers are based on all available information, and that in the real world, results could actually vary widely. Alright, let's step back and look at the overall picture. Ares Real Estate Income Trust is actively managing its assets. They're buying properties, taking on debt, and paying out distributions to shareholders. In terms of direction, Ares seems to be in a growth phase, acquiring new properties. But like any investment, there are risks. The company acknowledges how sensitive their property values are to changes in interest rates and market conditions, and of course there are always competitive pressures. Overall, Ares Real Estate Income Trust seems to be on a steady course. Their growth strategy and active management could lead to continued success. But like any investment, it's not without risk, so always do your own research. Never take my word for it. Alright, that's our breakdown of Ares Real Estate Income Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.